this is the issue that we'd like to focus on in our panel this morning, is that gap, that $120 billion gap, if I can put that in your minds to think about. And if you can imagine that potential of that gap being closed, what that would mean in terms of new businesses in Africa exporting and employing new people, investing in new plants and agribusiness processing facilities and so on. So let's keep that in mind as the prize that we're talking about. And we've got four very distinguished people to try and answer these questions about that gap. Why do we have it, and how do we close it this morning? And I'm very pleased to introduce them to you. I'm going to start on my immediate left with Dennis Denia. He's the Executive Vice President of the Afri-Exim Bank, the Export-Import Bank of Africa. He's been in that role since 2010, and he joined Afri-Exim Bank from Nedbank, and he was in charge of 5 Southern African countries there from 2006. Next to Dennis is Admasu Tadesse, who's the President of the East and Southern Africa Trade and Development Bank, also known as the PTA Bank, which covers the COMESA group of countries, and is a dedicated trade finance and development finance institution for that group of countries in the trade bloc. He's been in that role as the President and Chief Executive of PTA Bank since 2012, and before that he held a number of senior positions at the Development Bank of Southern Africa, the DBSA. Next to Admasu, we've got Nisrin Hala. She's head of the Africa desk of Global Trade Finance at Sumitomo Mitsui Banking Corporation in Europe. So it's an international commercial bank, and Nisrin's been working in this role for a number of years. She's very passionate about the African market, and beyond that, she manages a multi-billion-dollar US dollar portfolio with commercial and central banks in Africa, with multilateral institutions and with corporates, including some of the institutions on the panel today. So she's got some serious skin in the game, and you know, some very important insights, I think, for us to share about how the big commercial international banks view the African trade finance market. And last but by no means least, at my far left is Aurélien Mali, and he's a senior advisor for Africa at Moody's. He's leads most of their analysis at Moody's on all sovereign issues, multilateral development banks, ratings that Moody's does in Africa. So really he lives and breathes these issues on a daily basis. And we're very glad to have Aurélien with us and to have him representing Moody's on our panel today. So without further ado, I'm going to start off. We've also got, as well as our distinguished audience, I hope many of you will be joining the conversation after we hear from our panelists. So I'm going to leave about half an hour of our session today to engage with you and hear from you. But we've also got a number of distinguished people in our audience from the African Development Bank itself. We've got Stéphane Nalatembi, who's the Director of Financial Sector Development at the African Development Bank. Also Yor Kafour, who heads the Trade and Commodity Finance division at the bank, and Muno Mutapula, who's the Director for Regional Trade and Integration and NEPAD at the bank with us here on the front row. So we're very grateful for the African Bank for convening this session today and bringing us all together. And we look forward to hearing from them from the floor in the question and answer session. So without further ado, I'm going to open up to our panel now. I'm going to start with Dennis. And Dennis, I'm going to ask you this issue that the Director General of the WTO flagged up, that we have something in the region of a US dollar 120 billion per year gap in terms of the supply of trade finance in Africa that our African businesses and small businesses need. Why do we have that gap? You know, what factors explain why we have that gap, why we have those kind of problems. Can you try and shed some light on that?
Thank you, Thomas. Obviously, there are a number of reasons why we have that gap. I want to focus on just two of them. One of them is the underdeveloped local financial markets. Our local commercial banks do not have the requisite capacity at the moment. They don't have the knowledge, so we need to do something about that so we can develop capital markets on the continent. The other issue is that our exporters, our entrepreneurs lack knowledge in terms of what is available on the export markets. So they are not able to present bankable projects. So whereas the finance might be available, the projects are not available to do that. The second one is that even financial institutions such as Afrexim Bank, which was formed by the African Development Bank, specifically to focus on financing and promoting trade, we still have constraint in terms of capital. The capital that we need to leverage through borrowings in order to finance trade finance on the continent. So there is a shortage of capital as far as the DFI is concerned. So we need to build capacity for the local financial institutions as well. Let me give you an example. We had a situation where an Egyptian manufacturer wanted to export to Namibia. An Egyptian bank issues a letter of credit, but the bank in Namibia has no knowledge of the Egyptian bank at all. So that trade cannot happen without the Namibian bank having a confirmation from institutions such as Afrexim Bank to enable the trade to happen. So we need to find mechanism to enhance the capital that is on our balance sheet through a number of ways. One is guarantees, one is using the insurance market to make available the capital for trade finance to happen.
Thank you very much, David. I'm going to move on to Admasu. I mean, what's your perspective from the PTA Bank? And I mean, you particularly cover the COMESA region, which spreads over a number of countries in East and Southern Africa. Why do we have that gap, or does that gap exist in your region that you cover? And do you see it getting bigger? Is the trend, is it shrinking, or is it going to get bigger as we move forward?
Yeah, well, good morning, everybody. The story of gaps is now quite typical in conversations at annual meetings like this. It doesn't matter whether it's trade finance, SME finance, agribusiness, infrastructure. It cuts across the whole space. And fundamentally, it has to do with issues that Denia has raised. It's structural around the sector, financial sector. Trade finance has specificities to it. There's, of course, issues of credit quality. On the SME side, of course, we know that there's a big problem on the SME side. There's also liquidity issues with banks. Most banks need confirmations, of course, and we know that there's risk limits on the side of the confirming banks, even Afrexim's and PTAs of this world. But of late, of course, there's a new development, which is the new regulatory regimes kicking in much more strongly. So now compliance issues around AML, KYC is becoming a much more serious issue that is further constraining the gap that we already have. And of course, that is actually having compounded effects because major global banks, instead of beefing up capacity to deal with those issues, they're rather exiting. And we've seen a pullback and a flight to quality. And so that has actually exacerbated the problem, which means entities like PTA Bank and Afrexim have to play a bigger role supported by bigger institutions, but also commercial banking partners, several of whom are in the room. So I think that's really what's begun to change. We've always known that there's gaps. The gaps are quite pronounced for SMEs, even more pronounced for low-income countries, fragile countries. You look at countries like South Africa and Mauritius, their credit as a percentage of GDP is 100% or more. In the case of South Africa, it's on par with the OECD. So it's not a uniform landscape. But the many African countries that specialized institutions like us have to serve have very pronounced difficulties. When you move beyond the averages, it becomes very, very problematic. So I think the challenge is getting a little bit more complex these days, and it requires some more intervention from strategic financial institutions.
Thank you very much, Admasu. I think you built on what Dennis had said very well in terms of, that picture of some of the structural factors that have been there for a while in Africa, like the underdeveloped, financial sector, lack of bankable projects and liquidity issues. But you introduced, some of these new changes coming about with the regulatory frameworks that have changed the ability to bring in some of the global players, the international commercial banks, and maybe turning them away or making Africa a less attractive place for them to do business. I mean, that seems like the perfect time, Nizrin, to bring you in and hear your perspective on these type of issues, what Dennis and Admasu have been saying. I mean, how do you see, as an international commercial bank, you're running the Africa Trade Finance Desk in London for Sumitomo. How do you see this landscape?
Thank you. I would like to say a few words about SMBC, if I may. Sumitomo Mitsui Banking Corporation is a Japanese bank. It's one of the 3 mega banks in Japan and one of the top 20 banks worldwide. We are present globally via branches, subsidiaries, and rep offices. In Africa, we have 2 rep offices, one in Johannesburg and one in Egypt. In terms of our activities in Africa, we are primarily active in trade finance, but we also do medium to long-term funding, particularly in relation to project finance in the infrastructure and power sectors. In terms of the trade finance activities that we have in Africa, we work with mainly banks by providing credit lines and trade finance facilities to facilitate import and export transactions into and in and out of Africa. We also work very actively with the multilaterals and supranationals like PTA, AFRIXIM, and of course AFDB. Now back to your question. I'll give you a couple of the challenges that we face as an international bank in the country. Dennis and Mr. Tadesi mentioned the compliance-related issues and the lack of knowledge sometimes. Compliance has become a very critical deciding factor on whether we can do a transaction or not. The regulatory scrutiny is increasing on a regular basis. So it has become very difficult for us to... it's become very critical for us to make sure that the compliance requirements are met. And the compliance issues could arise at 2 different levels. The first level is when we onboard a new customer. For us being based, for an international bank based in Europe, we are also subject to the European laws and the UK requirements. They are very stringent. And when we onboard a new customer today, the list of requirements can be burdensome. And we do sympathize with the local available documents sometimes, but if we are unable to meet or to complete the KYC file, we cannot proceed. It also arises at a transactional level. I'll give you an example. Last year, I was working on an export transaction with a local bank. We wanted to fund an export transaction out of a country in Africa. And when I asked for the documents, we were only able to obtain a 1-page document. It was handwritten. That does not fly with my compliance team. I did sympathize with the structure. I understood how it works. But unfortunately, it did not, because it did not meet our compliance requirements, we could not proceed. The other issue that we face, or the challenge that we face as an international bank, is that some economies in the continent are monoproduct economies. They are heavily reliant on 1 or 2 commodities. And that leaves them vulnerable to external shocks, and that feeds into the trade finance business via the availability or the pressure on the availability of foreign currency. So today, when we lend, we want to make sure that we are able to get our money back. But when the commodity prices go down, this is what we are experiencing today, the foreign exchange, the foreign currency diminishes, which means that the banks are unable to meet all of their obligations on time. So that we take that into our assessment when we want to do business in a certain country or another, or a new customer. I'll stop here.
Thank you very much, Nizrin. I'm going to move straight on to Aurélien. And I think Aurélien, we've heard some very concrete factors given by our, our bankers on the panel so far about, I think, quite financial sector specific real issues and problems. But there's a bigger set of issues, aren't there, around that Nisrin was starting to hint at there about the structure of some of these African economies being quite undiversified, but also things like, you know, very weak transport and trade infrastructure, long, unpredictable times to ship your goods. If you're a Zambia sugar producer trying to get your goods out through the port of Dar es Salaam, it might take, you know, 1 week, it might take 3 weeks. If you're borrowing against that transaction, it's going to make the costs very high. It's going to make it risky for banks to want to take that on and get involved. Do you see those macro factors also being important?
Thank you. Good morning. I think they are essential, in fact. The title is Fostering Regional Integration, South-South Cooperation. I think to really foster regional integration, you need trade, but you need first trade within Africa. You have a slide, I think, that shows that, why the continent is not trading enough with itself. There is the funding issue, as I think it is mentioned by Denise and very clearly on the letter of credit. But on this side, I think financial exoneration has improved. You have now very good, very excellent institutions. We rate them, but like PTA Bank, Afrexim Bank, African Development Bank, that are doing their mandate, trying to promote trade, but it's too little. And I think the fact that you have unmet funding is more a symptom than anything else. As long as you, and I think sovereigns here, and it's through my experience of a sovereign analyst for 15 years rating countries, there is no railways, roads, bridge, ports with the adequate efficiency in running them in terms of time. Goods will not flow within the continent. And although I think the commodities will still find a way to be shipped away from Africa to feed the world economy, as long as there is no power to industrialize, to exchange goods, and the infrastructure, you won't see anything very concrete. So the gap is more, if you want, the issue also on the ability of government to keep macroeconomic stability in check. When you have a fixed restriction, of course, you will have some SMEs and some sector that will suffer. When you have inflation, a spike of inflation in the 50%, same way, soft capital controls, all these elements are real hindrance to trade. So I will stop there, but I think it's much deeper. The trade is just one of the symptoms and the gaps that have been mentioned by the CEO of PTA Bank.
Thank you very much, Aurélien. And I mean, whilst you've very well explained how these, as you put it, the trade finance gap is real, but it's also a symptom rather than a cause of this, low levels of inter-African trade, probably at about 13% across the continent of the total trade with the world. And a lot of this is also down to these fundamental factors which we've core business of the African Development Bank, like transport infrastructure, roads and railways and ports that you mentioned. And I suppose that, the positive side, as we sort of turn to look at, solutions and what interventions could be done to close this gap, that I suppose for policymakers and governments in Africa, as they commit themselves to tackling those challenges in trade infrastructure, roads, railways, ports, power, and so on, even trade facilitation measures. As they make progress there, they may see, the problems of the trade finance gap being alleviated as banks, reassess, and agencies like Moody's reassess, the overall trading climate. But let's move on to talking to you all before the session. You all felt very strongly that you wanted to talk about a positive, or a series of interventions that could make a positive agenda for Africa about how do we close this trade finance gap. And so let's move on to that. Let's see if we can start to surface what some of the elements could be in that kind of agenda for closing Africa's trade finance gap. And I can understand from what you've said in terms of the current problems, that might involve a whole range of different actors working in concert. But let me start with Dennis. From your perspective, you're one of the leading DFIs and African finance institutions. Give me a couple of proposals from your side. What are you planning to do or got in the pipeline that might try and bridge this gap, and what would you like to see feature in that agenda, positive agenda for action?
Thank you. Let me start by what Afreximbank is doing about it. I think the first thing is to make ourselves fit for purpose. We are raising capital to give us a bigger balance sheet so that we can get the resources onto the continent. We are also increasing our partnerships with other financial institutions and DFIs so that we can co-finance and bridge this gap. So at a practical level, this is what we are doing. She mentioned the issue of compliance. We realize that our international friends are finding it difficult to lend because of compliance issues. So in 2015, we launched a compliance depository initiative. We actually had the first conference in Seychelles in September of last year, where we're bringing together African financial institutions. So we built a depository for all the borrowers so that when we deal with international banks like Sumitomo, they can have access to information under one depository. So it helps in terms of compliance. It reduces the cost of compliance and hopefully the cost of doing business on the continent. In terms of enabling African commercial banks to do international business, we introduced a product called African Banks Correspondent Banking Product, Africo Banking. The idea behind Africo Banking is that the international banks will take the risk of Afreximbank. So it will enable those lowly rated financial institutions to issue letters of credit that are acceptable internationally. So that's one of the things that we are doing at a practical level to bridge that gap. Now, one of in fact, the major reason why we are here is to promote intra-regional trade. Starting this year, Afreximbank launched a strategy called Intra-Africa Strategy, which is premised on 4 pillars. Create the products that we need to trade. One of the reasons why African countries don't trade with each other is that we tend to produce commodities that our next door neighbors don't need. So what you need to do is to create products that are required in your neighborhood. And to do that, you need to industrialize. So you need to add value. So we launched a number of initiatives, one of which is called the AfriCoin, Africa Cocoa Initiative. The idea behind that is that instead of exporting raw cocoa beans, you build factories so you can add value to produce intermediate raw materials. You don't have to produce chocolate in the first instance, but you can produce cocoa butter or cocoa liqueur for export. You create jobs, you create value on the continent, and you enable trade to take place. We are looking at facilitating intra-Africa trade by enabling countries like Zambia to add value to raw materials that are produced in DRC, for example. This is a live transaction that we are putting in place. And because of our rating and our international connection, we are able to attract international financiers to come and bridge the gap.
Thank you very much, Dennis. I'm going to move on to Admasu. We heard a number of specific initiatives there that Afreximbank's doing, as well as sort of more structural, strategic work they're doing to strengthen their own balance sheet as one of the key African finance institutions, as you are one of those sisters yourselves at PTA, and also trying to strengthen African commercial banks in the system. And then you mentioned several specific initiatives that they're working on. What's the story at PTA? What are you working on in this space, and what's coming through the pipeline that we can look forward to, in the months and years to come?
Well, the story is actually quite similar. It's not just because I'm sitting next to Mr. Denya, but the reality is, as an FI, when you try to respond to these gaps, growth and partnerships is a classical response. We've grown our equity threefold in 4 years, 300%, and our assets have also grown in similar measure. So we've really reached out like we've never done before, not just within the same geographies, but we've also begun to step out of the COMESA region. Mozambique is now also a new member state, so we're now active in Mozambique as well. We'll be expanding to other countries in Southern Africa as well, and also to other countries that are bordering COMESA. So that is, of course, a story of growth, both in terms of capital and markets. But coming back to the issue of the symptoms that Aurelian highlighted, we're fortunate to be a DFI that does trade finance as well as long-term finance. So we do infrastructure finance, we do industrial finance, we do SME finance. And that actually helps to begin tackling the underlying structural issues. So we've extended our partnership strategy to strategies that are now being implemented in the area of power, for instance. Clearly ADB is now championing that. A few years ago, of course, the Power Africa initiative was launched. We threw our weight behind that as well. We see a number of independent power producer companies that are now on our balance sheet. We've funded quite a few power projects, quite a few of them being renewable in the context of the green growth thrust. So we've really been trying very hard to push the infrastructure agenda, including transport now, and there is a trade initiative as well coming from the U.S. and along the same lines of the U.S. Power Africa initiative. So I think there's some very exciting momentum building up on infrastructure. I think, to be honest, it's not new. It's been with us for almost a full decade. But I think the implementation, the gaps are huge, and so there's a lot to be done there. And then, of course, the SME space is a very specific problem, because it's one thing to have need for working capital to trade, but in the first instance, you need that capital to actually be productive. You need the equipment. You need to invest in developing the company itself. And so we've been very active as an SME financier as well, and we've got very strong partnerships with a number of DFIs. The European Investment Bank is one. For many years, we've had partnerships with the China Development Bank that's given us lines for SMEs. And of course, now there's a very exciting initiative that the ADB is launching, AFAWA, which is looking at SMEs from a gender perspective. We're also going to be joining forces with the ADB on expanding access to finance to women SMEs. So I think it's a complex problem, as we know. You've got to attack it on many different levels, and we're trying to do our part. And of course, capital growth is a necessity in that process.
Thank you very much. It was fascinating to hear that the PTA banks sort of opening operations in more countries and extending the sectors that it's working in, and some of these new partnerships that you're particularly with the African Development Bank, trying to sort of kick off so that you can have more impact. Nizrin, I'm going to turn to you because both of our African finance institutions mentioned, strengthening their balance sheets and reaching out for new partnerships or strengthening their partnerships with global players, which is very much where you come in. Could you tell us a bit about how you see that happen? Is that something that you're responding to them when they're reaching out? Is there good news on that side? And then secondly, I know it's a slightly different issue, but you did mention the compliance side with Know Your Customer. And I know that's an area that is something that maybe, it could be done quite quickly. Maybe it's not rocket science, but to help SMEs in Africa, complete the application process so that the trade finance that is available, they're getting it rather than being rejected. But those were the two of the points that I thought you might like to come back on. But feel free to add anything else to that.
Yes, thank you. Actually, thanks to initiatives like these, the ones that have been mentioned, we have been able to accommodate transactions that are originated from countries or from small banks we wouldn't have otherwise been able to work with directly. Back to the compliance issue as well, possibly what could help the SME space as well. Maybe if we could put the local banks or the DFIs locally, if they could put together a package in terms of the compliance documents, what could be required to make sure that the file is complete, make it, standardize it. Whenever there's a transaction, whenever there's a new relationship, the KYC file is readily available. But on the other side, it would be also useful to educate the small, the small companies that are involved in trade, import, and export on what needs to be done, what's required in terms of documentation, and also what they can use in terms of trade finance instruments. Today, we see in certain countries, some small companies still having to pay cash in advance before they import. Now, today, if they use an LC, it will unlock their cash flows. They could use LC confirmation, LC refinancing, discounting, and that will give them ample time to get the money together, to repay it, use the cash flow to increase their business volumes. International banks, local DFIs, and local commercial banks can work together to put this list together jointly. Another issue that has also been touched on, creating the right operating environment on the soft infrastructure side and the hard infrastructure side. By that I mean the governance, rule of law, having the right railroad transportation. Today, if you have a farmer in the north of the country that has good produce, but by the time the products get to the port and you have perishable goods and you don't have the infrastructure in place, the goods will die and the transaction will no longer be viable. And that's why, and from our perspective, that's why it's very important as well to work with PTA, AFRIXIM, and African Development Bank. We need to harness this on-the-ground expertise and work together with them to be able to support the SMEs and the trade finance business.
Nizrin. Aurelian, I'm going to kind of give you the last word on this. I'm going to then kind of bring in our audience and invite them to join the conversation, whether they're from a banking background or a business background. I think there's a number of interesting points for them to come in. But from your perspective at Moody's, from what you're hearing in terms of from our panelists so far, does that sound like the right kind of agenda? Some of the ingredients in that, or is there anything missing?
No, I think we are to the point. As you know, as a rating agency, we don't give advice. I would like to come back to the numbers that I saw on the internal intra-African trade of 13%. This is something that is probably overlooked, but in the region there is the issue of data quality. Only a small portion of the trade flows are captured. So this number is low, but I think in reality is not that bad. There are many examples. For example, before Nigeria removed its oil subsidies, everybody knew that the oil in Benin, for example, was mostly coming from Nigeria through smuggling. But also you have all the traders at the borders of many African countries. So I think it's a good point to start on the transparency, and I think it's absolutely key here. The rating process is a part of that. It's a transparent, independent view on institutions, on banks, and it is used by the institution on the panel and to try to have a proxy of some risks. So we now rate 20 countries on the continent and 8 MDBs. And we saw a surge in rating over the last few years. But to come back also to this gap, I think there are so many risks: political risk, currency risk, all that, to financial insurance, financial innovation. You can find ways to improve them or to reduce them. But I think the lack of cooperation and I weight my words, and the lack of coordination to really develop intra-regional infrastructure that will unlock trade is, I think, paramount. There are power, renewables, some infrastructure that makes sense, but everywhere else on the continent they will have been built. Without mentioning India, for example, that could provide 500 million people electricity with constant renewable sources. But you have also some bridge, the railway between Dakar and Bamako that has been not refurbished since decolonization. It makes sense because you have a port. The bridge between Congo-Brazzaville and Kinshasa, it's on the table for the last 50 years or plus. There are a corridor to exit for commodities. Angola, for example, refurbished, and I was the lead analyst, some railways to go to Zambia and to DRC, but it stopped at the border. And when institutions like the African Development Bank, PTA Bank, or Afrexim Bank, they want to fund an infrastructure that is needed between several countries, it's, and again I wait my word, sometimes a nightmare, because you deal with different regulatory regime. There is requests that are not matching, in fact, and delays in implementation, and at the end of the day, you don't have the infrastructure. So I think it starts really there. Integration is cooperation and coordination. We have a lot of blocks, trade blocks, but when you see the result, I think it has to go back at this lack of really pushing this infrastructure.
Thank you very much, Aurelien. I'm going to start engaging with our audience here. We've got a very full room. I'm sure you've got a lot to contribute to this discussion. We'll probably also be having some contributions from the Twitter sphere coming through, so I'll read some of those out. We've got a good half an hour, so we've actually got plenty of time to hear from you and your contributions and comments, your questions to our panelists on the two topics we've been talking about, the gap that we have and the problems behind that in trade finance in Africa, and then your perspectives on how do we close that gap, and maybe if your institutions are actively working on that, it would be great if you'd like to share those initiatives with us. While you're getting your questions and comments ready, I've got two guinea pigs who are happy to go first. I'm going to start with the African Development Bank. You've heard them mentioned a number of times. And so let's start with hearing what the African Development Bank has been doing, is working on to try and close this gap. And I think they've also got some new ideas about partnerships they'd like to see happening in the future. So I've got your Kufor here in the front row from the African Development Bank, and he's ready to join the conversation. And thank you very much, Yor. Can we get a microphone down for you?
Thank you, Tom. My name is...
You can stand, yeah.
My name is Yao Kufuor, and I lead the trade finance efforts of the African Development Bank. I think the key message behind this whole gap story is the fact that the existence of such a huge gap, trade finance gap in Africa, means Africa is not fully capturing the growth-enhancing effects of trade. And that is why at the African Development Bank, we thought it was very important, particularly at the peak of the financial crisis in 2009, to step in directly and help address the sudden short for commercial financing for trade. Since inception, we've always considered trade as an important sector, and that actually led the bank to help establish institutions like the Afri-Exim Bank and then the PTA. PTA was in 1983 and Afri-Exim 1993, and we've supported them all the way through. Now, coming back to our trade finance program, which was established in 2009, initially as a stopgap measure at the peak of the crisis, as I mentioned earlier, to address the issues that emerged then. Following that, the bank reviewed its position, took the decision to let the program evolve into a full-fledged trade finance program. So far, the program has supported close to about 1,200 transactions involving 80 financial institutions in 26 countries for a cumulative trade volume of about 3.6 billion. We're currently looking to scale up our program, and that would involve basically scaling up our operations across the entire functional areas, which is lending, knowledge work, and technical assistance. On the lending level, we're looking to do more by introducing new products. We currently have 3 products, which are the risk participation arrangement that works well with the International Confirming Bank by sharing credit risk over a portfolio of trade-related transactions. We also have the trade finance lines of credit, which we extend to African operating financial institutions, and the likes of Afri-Exim have really benefited from that facility. And we also have what we call the soft commodity finance facility that is targeted at aggregators involved in the export marketing of various softs. Now we're looking to introduce direct guarantees, and what that would enable us do is to provide risk mitigation support on individual transactions. We're also looking to introduce supply and value chain financing, and I think Dennis mentioned the need for some value addition before we ship our primary produce. We consider that very important. If you take cocoa, for instance, the aggregate value of the raw produce globally is about 12 billion, but we understand that the confectionery products from chocolates and the related products in total value about $112 billion annually. So there is a gap of about 100 billion, which happens outside Africa, and it's important for that part of the value to occur here in Africa. So we're looking to scale up our program, basically increase its current wallet size from 1 billion to something possibly twice that value. We'll be engaging our senior management on that very soon, and hopefully have our board consider the proposal. They mentioned how important partnership is in trying to address the current trade finance gap. So we'll be working through and with institutions like Afri-Exim Bank, actors in the public sector space, and then also actors in the commercial world, both the international confirming banks and African operating banks, to see what we can do by providing credit support, either directly or indirectly through these to reach the SMEs. So watch this space. We may be coming out with some announcement about our program and its products that it offers. Thank you.
Thank you very much, Yor. It's exciting to hear about not just what the African Development Bank has been doing in this space, but your ambitious plans to scale up, as you said, not just in terms of trade finance, direct operations, but also knowledge work and convening partners together and technical assistance. We've heard about the importance of global partnerships for Africa in terms of closing this trade finance gap, and we've heard some cases from Nizrin about relationships with Japanese major commercial banks like her one at Sumitomo Mitsui, but we've also got our next commentator before we get into the audience is coming from Brazil, and he's Enrique de Azevedo Avilia. He's sitting here in the front of the audience. Can we get a microphone over to Enrique? Now, Enrique is from the Brazilian Development Bank. He's based in Rio de Janeiro, and he heads up the export credit division for business development in Africa. And, you know, Enrique, you know, in a few words, could you tell us a little bit about the story of Africa reaching out to Brazil in this area for partnerships? And are there also kind of lessons that Africa can learn from Brazil's experience, as well as just tapping, you know, in terms of financial partnerships?
Okay, of course. Thank you, Tom. Morning, panelists. Good morning, all. Well, Brazilian Development Bank has a very active export credit division. We have supported Brazilian exporters for more than 20 years. In a first step, particularly for South America region, of course, considering interests in business developed from Brazilian companies in the region. But I would say 10 years ago, we started also try to replicate here in Africa what we have done in South America. And first, we started to work together with our Ministry of Finance, combining BNDES funding solutions with an export guarantee fund managed by our Ministry of Finance. So we have been able to facilitate important projects here, particularly in to support infrastructure systems. Angola, Mozambique, Ghana are three good examples. But I mean, these transactions involve projects under government management. Usually we take sovereign risk together with this export credit fund, and the borrower have been the local governors. So we considering the movements from Brazilian company in the region, we need to do more. We believe we need to develop alternative ways, alternative structures, particularly for private companies, for private sector. And so our main strategy is to develop partnerships here. I'm pleased to see Dennis, Admaso, Yao, Africa Exim Bank, PTA, Africa Development Bank are already good partners we have here. We have discussed exactly what it's possible to do together, considering our credit risk guidelines, restrictions we have as a government bank. Our mission is to generate jobs and income, but we have made progress. Some transactions also have been already structured, but we have faced, of course, many difficulties. I totally agree with Dennis when Dennis mentioned we have a strong budget, strong financial statements, a budget, but we don't have bankable projects. And that's one of the difficulties that we have faced. This year, in our export credit division, our current budget is around $5 billion. It's a huge amount of money, but we have faced the same problems. So I have a question to Dennis. In agriculture sector, you maybe know Brazil is the most important player in agricultural business. We have a very good experience in Brazil in terms of agricultural cooperatives. And agricultural machines is one of the industries we believe we can contribute to assure food security and rural development in Africa. We have a strong agricultural machines industry in Brazil, electrical products for transmission and distribution is another good example. I have a large experience to promote this kind of investments in Brazil. But going back to agricultural machines, what we have seen here in Africa, we have the dealers, usually the company sales team representative, and on the other hand, the small farmers as the equipment end users. And in Brazil, we have a good experience in terms of joining small farmers in order to have a formally constituted company that can meet AML, know your customers' requirements. And it has been very helpful in terms of structured bankable projects that can be financed by our bank. So is that something that African governments could encourage here? I mean, to join small farmers in order to create better and with a better governance companies that can in fact be financed by governments, DFIs as ourselves.
Thank you very much, Enrique, both for your intervention and the question. To Dennis, and maybe Admasu might have thoughts on that as well. While you think of your short answer, I'm also going to invite, if there are one or two more for the first round of our questions. We've still got a good 20 minutes to go. I'm very interested to hear from people. I'm seeing hands going up. If I can get microphones running, please. I'm interested to hear from, SMEs, businesses accessing trade finance, your stories, people in the banking community, where you're working on. So, gentleman over there, you sir, would you just stand up and introduce yourself very briefly, and then give us your comment or question?
Sure. Thank you for organizing very timely and relevant sessions. And I welcome the fact that the second part focused on the positive aspect and development in the continent. I am with Afrexim Bank, and my name is Hippolyte Fofak. And one aspect that I did not hear very much was the issue of what is actually being done at the continental level to create the space for increased intra-African trade. And what was done in particular with the tripartite free trade agreements and prospectively the 2017 continental free trade area will actually help address one key constraint, which is the market segmentations, which has actually prevented Africa to take advantage of growth and large investment opportunities that China has enjoyed over the past decade. And Afrexim has actually positioned itself to take advantage of that emerging opportunity by essentially creating what we call Egypt-Africa Trade Promotion Partnership, which will enable countries in the Node which have vibrant manufacturing from infrastructure industry to export within the continent and vice versa. But one question I have, and going back to the Japanese on the panel, is we've seen, if you look at the trade landscape in Africa, we've seen trade diversification to Africa trade partners from the traditional to Asia, yet the trade financing is still very much in the old framework and directions. To what extent could bank like yours actually help rebalance the trade financing within Africa to align it with the emerging and more balanced trade itself? Thank you.
Thank you very much. I think we'll hear from the panelists to respond to a couple of those points. I think the first one would be about what Enrique said. In the agricultural sector, can we structure the smaller growers together to cooperatives to be able to access finance, particularly for much-needed agricultural mechanization, as a way of boosting productivity to trade with each other? The second one, maybe bigger picture. I don't know if Aurelian has been following the tripartite free trade area launched last year and the negotiations going on for the continental FTA. Are these going to change the landscape a bit? And then, Nizrin, there was the question very much to you there, the last one about, can institutions like yours help rebalance, some of Africa's export directions and help to sort of play a role in that? I'll invite you to come briefly on those 3 points, if you'd like to, and then we'll take another round of 2 or 3 more questions from the floor.
The short answer to your question is yes. That will be helpful. We are already doing something similar to that. If you take production of tobacco in countries like Malawi or Zimbabwe, we work with the tobacco merchants to finance them so that they finance the outgrowers, the local farmers. We provide input support, but because we are not on the ground, we use the tobacco mentioned as the coordinator of our financing to the farmers. So it is possible, and we are already doing something like that.
Just thank the AfriExim colleague in the back there for flagging the issue of the tripartite. Not everybody here may know what that actually means. The tripartite is actually the grand free trade area of Eastern and Southern Africa. It ranges all the way from Egypt down to South Africa. It's the largest economic bloc before we get to the African Economic Community. What has happened there is very exciting. There's been 3 regional economic communities that have joined forces. So it's COMESA, the Southern African Development Community, and the East African Community. It's 26 countries, well over $1 trillion of GDP. We have reformed our own constitution as PTA Bank to become a bank of the tripartite. So we no longer just doing COMESA, we do COMESA, SADC, and the EAC, of course. And we have recently launched an initiative to expand access to trade finance in the tripartite. And with your indulgence, moderator, I'd just like to ask Stefan from GML Capital, who's a joint venture partner of PTA Bank, co-managing the new trade finance fund that's just been launched. He can just say 1 or 2 things about that that will also alert the community here as to what's coming by way of a very exciting new initiative.
Well, while we get in the microphone, let's do that, because I think it's fascinating, Admasu, what you said about how your institution has actually changed its constitution to respond to that positive movement by leaders of these African countries across those 3 trading blocs. And now as they've created that bigger economic space with an FTA, many of them signed last year, about 12 months ago, you've been very quick off the mark to enable you to work across that economic space, not just be in one small part of it. So let's hear briefly for how that's working out.
Sure. Hi. Oh, sorry, that's a little loud. I'm Stefan Pinter. I'm Chief Executive Officer of GML Capital, LLP, based in London. We're the partners. We're lucky enough to be the partners of PTA Bank. And we are just about to launch a investment fund focused on providing trade finance in Eastern and Southern Africa in transactions that have 1 foot, be it exporter or importer, in one of the PTA Bank member countries. My firm, we've been managing investment funds invested in trade finance since 1996. And what we know about trade finance is that done well, and I'm sure Nishin will agree with me, and other bankers in the audience, trade finance, when done well, is a low risk, low volatility asset class with very little correlation to any other major markets. And as we all know about trading anything, things do go wrong from time to time. But in trade finance, again, if done properly, the recovery rates are very high. And PTA Bank are experts in trade finance, and they're great at it. And so the fund we're just about to launch will be focused on transactions, some of which will be already on PTA Bank's balance sheet. So we'll be able to free up capital in the bank to pursue other trade finance opportunities, and some of which will originate ourselves. So we'll look forward to working with bankers in the PTA Bank member state area to co-invest with you, to work with you on providing trade financing to your customers and to yourselves. Thank you.
Thank you very much, and that's a really great update. To get for this session, real innovation and real expansion of the offer on trade finance from PTA for customers in that region. Nisrin, did you want to pick up the final part of the question from our colleague from AfriExim Bank before I take another round, or do you want to hold fire?
Sure. No, I'll try to answer your question. Historically, we have seen specific countries or specific trade partners that have been very active in Africa. Now, on the Japanese side, I can tell you that as a bank, what we can do to perhaps introduce new partners is engaged with our customer base on a regular basis, which we have been doing. They've been coming to us asking about what can be done in some of the countries in Africa, how we can help them get their business done in Africa. We've been engaging with them on an individual basis, but also we have been doing some workshops. We are very active in a number of countries, about 11 or 12 countries as a bank in Africa, and additional ones as well through PTA and AFRIXIM. What I can tell you is that the interest from the Japanese government or the Japanese corporates is on the rise, and to demonstrate that the TCAD meeting, which is the Tokyo International Conference for African Development, and there was actually a session on that yesterday, will be held outside Japan for the first time, and it will be held in Kenya this year, in August this year. This demonstrates the commitment or the increasing interest from Japan. So you will see more and more Japanese companies coming to invest into the continent. Some of them, they've already been here. They've already invested in the continent. But we've been receiving many requests from new customers or new companies that have not done anything in Africa, but they are interested in doing that. And being the conduit, being an international bank, we sit in the middle. And we try and pass on the knowledge that we have to assist them. But also being a global bank, we engage with the non-Japanese customers. We are present in the US, we are present in Brazil, we are present in Europe, and in Asia. Of course, we always talk to them about our business in Africa, and we always try and facilitate their activities here, of course, by either doing trade finance or via doing the project financing business and medium financing. Medium-term financing. So we are in the middle, and we try to play this role of matching buyers and suppliers, or by passing on the information that we have. And I hope that answers the question.
Thank you very much, Nizrin. I'm sure he'll seek you out afterwards if he needs more of an answer from you. We've got just under 10 minutes left. I'm going to try and take another 2 or 3 questions. I'll be really interested to hear if there are any SME owners in the room who've got experiencing accessing trade finance, whether it's worked well for you, problems that you've had, as well as other members. Are there any SME owners in the room or businesses in the room who would like to? Can I have the lady at the back? And if there are 1 or 2 more, let me see that from the SME side. Have you got a real experience to share on problems or success on trade finance? Okay, we'll go to this gentleman next. So, madam, please introduce yourself and give us a quick, we're running out of time, so if you give us a quick question or comment for our panel, and then we'll take 1 or 2 more. Thank you.
Well, thank you so much. My name is Eli Mwale from Zambia. I'm an SME in the export market. And I think the challenge we have with our banking sector is not understanding the agricultural commodity trade finance. And we tried to get trade finance, we could not manage it, but we got it from the projects. But trade finance is the simplest that a bank can do, because there is already a guaranteed payer into your account. So why should I save with the bank if they cannot facilitate my trade, and with guaranteed money into your account, you take out your money and leave what belongs to me? It's a challenge. Can we have it addressed, please?
Very well said, and you put your point very well. This gentleman over here, he's got his hand up, and is there, while he's getting the microphone, is there another SME in the room who'd like to join this part of the discussion? Oh, sorry, I beg your pardon. I was looking at the gentleman behind you who's got his hand up. So we'll try and get a microphone over to you next, sir, if you just keep your hand up. Over to you. Please tell us who you are.
Yes, my name is Musa Kasonka Jr. I am an investment banking advisor, and we have noticed the following. It's called capacity building, but if I call it capacity building, it will be lost in space. And it's a follow-up from what the lady just said. As government has withdrawn from business, SMEs are now picking up large tickets. But we find there is a gap in understanding what they are doing. So is there anyone in this room who can put together a sort of mentorship fund? Because as an advisor, for me to wait until success is going to take some time, because I have to structure the transaction. It's very straightforward, but obviously there is a capacity problem. So straight to the point, is there anyone in this room who can put up a mentorship fund that can be managed? You have to think through it, but we need it because there is a gap and there is an opportunity.
Thank you very much. I think that's very much to the point. You've spoken to the point that was flagged earlier about the quality of applications coming through from SMEs and bankable projects in their applications. So we avoid the situation when Nizrin said where we get one handwritten page from an SME applicant. But you, sir, would you like to introduce yourself and what's your comment or question?
My name is Langa Mwene. I'm from it's a transaction advisory company called Sapex Capital. Basically what we do is we try and help local companies to access finance. So basically the point that I wanted to make is some of the challenges that you say you are facing in dealing with some of these SMEs. What we would propose and offer to you is a solution where we do customer onboarding, we do your KYC arrangement, and also just get all the documentation in place. One of the interesting examples of a transaction that we've done recently is private placement for one of the local pension funds. An SME is looking for trade finance, and they've gone to the banks, and because their project doesn't seem like something that the banks have understood, and due to liquidity challenges, the banks were not able to support that project. But then you've got a pension fund that was sitting on quite a substantial amount of money that was looking for alternative assets. What we were able to do is sort of get the documentation that is required for them to facilitate their approval, and then also package the transaction. So I think my proposal is a formalized sort of partnership between companies like ourselves and DFIs like yourselves that are able to get this information and possibly also originate transactions and then bring transactions to you that are already packaged so that you don't have to go through the process of doing your KYC. I think that also reduces the time and also reduces the costs for you to onboard new customers.
Very much. I think these three questions that we've had, panelists, they're really all about your customers, aren't they? And how they're able to access your services, whether there's intermediaries who can play a role. I mean, do we need something like Africa Trade Finance, moneysupermarket.com that, brings together all this on a platform that they can log on to, whether they're in Ghana or they're in Lagos or they're in Johannesburg or Lusaka, see what banks are offering in their market, what the terms are, where, there are intermediaries that can help them fill out their applications and stuff like that. How do you like to respond? We've very much heard from these African SMEs who are going to be the driving force behind more interregional trade. Why can't we lend more to them? They've put their money in these banks. Why won't they lend them trade finance?
Obviously, I cannot comment on the specific circumstances.